Welcome to today's webinar. Today we're going to be talking all about the impact to the property industry from COVID-19. In terms of what we're going to be doing today, we're going to do a quick introduction. I'll run through the industry impact. Then we'll jump into Social Studio and do a bit of a social listening scan and see what people are saying about different industries online over the last 90 days. Then we're going to focus on the key challenges. What are those top 5 challenges and what should a tactical response be? And then how can you then thrive into the new normal? So all of this for the property industry. The property industry is massive, so it's going to be a really great little session. Let's just jump straight in. My name is Robin. For those that don't know me, I'm the CEO and co-founder of AF Digital. We sit on the Salesforce Partner Advisory Board. I'm 6-time Salesforce certified, and my next cert is the Nonprofit Cloud Consultant cert, which I'm really excited about. My background before starting the business, I was a business analyst. I used to work for IBM, and then prior to that, Vodafone for a very long time, very much specialized in CRM. My personal interests are the future, business transformation, and skateboarding. So if you want to follow me, Robin_AFD. My business, AF Digital, we're a trusted Salesforce Gold consulting partner. We're also a registered Salesforce org partner, and we are really multi-cloud sales service marketing community, really here to provide technology advice, transformational projects to help you rapidly go live with Salesforce and get value from it. And we also offer TeamX hybrid managed services, which is a mix between marketing and technology. That's why it's called hybrid. We have quite a wide range of industries that we've worked with over the last 9 years. One of my favorites is the property industry, and we've had many successes within this. So that's really kind of what's led me to create this content today for all of our property clients out there. Great, so let's go through the industry impact of COVID-19 to the property industry. So first, let's define what it is. So, and this is massive, right? The property ecosystem is not small. We've got investors, buyers, sellers, all kind of in the same thing. They're buying and selling property. We've got landlords and tenants. So the landlords are providing housing to their tenants. The tenants are paying for it. We've got commercial property as an industry. Who provides the property that the restaurant sits in, or that the the office block is in? Property developers. These guys, they have big banks of land and they develop it, and then they sell those apartment blocks. That's a big industry. Agents and inspections as well. So what about that whole kind of like, they're helping the buyers and sellers transact on both sides. They're kind of facilitating that and doing inspections. Interest rates and mortgages as well, obviously. So providing the funding for these buyers to buy these properties. And then also another aspect of the property industry is just the value of property. So this encapsulates the entire property industry, but it's massive. And I've missed things already. As in this morning, I've had a discussion. I missed builders. Apparently they're a essential service. So there's another stakeholder in here. So let's go through the impact. So they're actually saying that half the world's money is gone. So in terms of the value of GDP lost as a result of COVID-19, it's really bad. People were talking about a global recession happening prior to COVID-19 anyway, so we kind of weren't on the best grounds coming into it as a globe. And what we're seeing now is an unprecedented rise in unemployment. You've got really insane spikes, like this graph on the top right. We've got this projection of 2.25 million. This is already dwarfed by the current numbers. But if you look back, it's really never been that low. There was a US recession in the early 80s. It just had a little spike. That was the top, really. So nothing, it's just not comparable. You see most of the jobs being lost in leisure and hospitality, healthcare, professional and business services. And it's just really amazing. Like it's just shot up and it's a massive impact. I think we're all quite aware of the global impact. The FTSE stock markets, they've had their worst plunge. So this graph shows the rate of change. And it's statistically worse than the financial crisis in 2008, 2009. And there's a likely drop in property value. So across the board, and if you look historically, you've got the financial crisis, the GFC back in 2008, 2009, that caused quite a big dip. And then there's another one here. I'm not sure exactly what that one is here. And we've got this at the moment, which we've come out of. So you know, it's already shaky grounds. But what we can kind of typically draw on is there may be a little appreciation after each of these crises. You know, there's always a little bit of stimulation, but it's also the potential that it's much worse than we realize it is now. Property valuers, the way they are dealing with the market uncertainty is to just be very conservative. They're caveating their advice. They're estimating that there's probably more downside than upside. So they've got a negative slant on it. And they reserve the right to kind of change their opinions at any time as events unfold. So there's just no certainty in the market at the moment. It's really hard to know what will happen. What you have got is people that can't afford to buy the houses they intended to buy. So you've got all of these in-flight transactions that are all being very complicated. So let's assume that I was about to buy property, I was about to settle, and I can't because I lost my job and I don't think I can pay for that mortgage. What should I do? You know, who's at fault there? So that's really a tough situation. And there's no clear kind of rule, or well, I mean, there's all sorts of different approaches to it, and all sorts of markets will have their own legislation around, you know, what happens here. But the problem is it's a messy, never seen before situation. There are some kind of little highlights, like first home buyers. The government is doing their best to continue supporting them. So they've extended first home buyer loan scheme that allows them to buy with a lot less capital. But you know, a lot of these buyers have had their dreams shattered overnight. And it's really now, as a borrower, if I have to depend on a bank, it's a lot harder to have that trust of the bank because I don't have the confidence. If I don't have confidence in my job, then it's going to be very hard for me to actually support that mortgage. Generally, where a customer is in a severely affected industry such as tourism, hospitality, or retail, then their loan is declined unless we can prove that their income is unaffected. So their loans will be declined unless their income is unaffected. This is from home loan. Oh, that's just advice. So COVID-19 will have a dramatic effect on the mortgage process. So banks are having a hard time actually processing the mortgages. And now, like without the paper stuff, so now they have to go online, but it's a very old industry with very old technology. And also the data security risk of doing things online is extravagant. I don't know if extravagant is the best word. Mortgages just aren't really fun right now for anyone. And there's all these people that can't pay their mortgage. So, you know, what will happen to all of those people that can't pay their mortgage? I don't think the bank is going to just not charge them. I think it's more they may get deferment, but eventually they will have to pay that mortgage. So there's really a bit of a debt crisis that's looming around these mortgage repayments. The tenants are really in a hard position here. Sorry, tenants, the owners. Yeah, so it's really dramatic. And then it all comes down to your personal credit score, because this is what will allow you to borrow on for the future. So as an individual, there hasn't been any changes apparently to the credit scores. However, I can't speak internationally. but they are saying that it still applies the same method, right? So missing credit card payments, that will impact your credit card score. So sorry, your credit score, which in turn removes your ability to borrow, which in turn makes you as a buyer, it actually takes you off the market as a prospective buyer, and it's one option that you don't have anymore. Will they crash the property market? Like, will the property market crash as a whole? And it's a lot of people are kind of saying that it's very much just going to sit on the side. So there's a lessening in the listings that are being put out. You know, people aren't willing to sell right now, or it's difficult to sell. So there's kind of this talk about buyers and sellers sitting on the sidelines until markets reopen. There is also, because the RBA have cut interest rates, so that is to curb inflation and stimulate the economy, but they've done it for 3 years. So that's a very good, I guess, indication that this could, well, the RBA expect it to be a very long-term thing. As a result of that interest rate cut, borrowing was cheaper than it's ever been before. So this is really where it's kind of, it's actually a great time to borrow money at the moment, because it's so affordable. But it just kind of also tells us that we've got a bit of a problem. Real estate agents, they can't sell properties at the moment. There are alternatives, and this is an interesting article I found, silent auctions instead of public auctions. So apparently this is a technically possible way of selling a house, and it's actually quite a cool way in this time, because you're not really kind of getting people to compete on price. But there is, as I said before, there's a decrease in the number of homes being listed. So this, I think, was a report from the US, April 7th, 15% decrease in listings. In Australia, there was this article on 26th of April, very recently, 60% in some city regions drop in listings. So that's really quite astounding. However, this is the very interesting thing, is that the drop in listings, that maintained the average prices because of the demand supply match, right? So because there was kind of more demand than supply, there wasn't a drop in house prices. So we didn't face a drop in overall value. So these equity or homeowners, they don't get that market drop. The market value has stayed, but only because of this pause, I guess. There's nothing really more you can put to it. So I'm not sure exactly how that will play out, but that was very interesting to see. Yeah, so this is the RBA, the interest rates cut. This has a lot of downstream impacts as well. I did a webinar on financial services and fintech a few weeks back, and yeah, basically this is actually putting the pressure on them. It lowers their margins, all sorts of things. So there's all these other impacts, but it's for the economy. There's also tax changes. So as a result of all of these things that are going on, the government is definitely getting involved and making changes to stuff. So there's all sorts of things to be aware of if you pay tax, which everybody pays. So if you're an investor, they are increasing taxes to limit the deductions that can be claimed from the investment. So, and you know, there's all sorts of detail there I won't go through. Rate for foreign investors, rate increase from 10% to 12.5% on their withholding tax. So that means that, and they've also reduced the exemption threshold from 2 million to 750,000. So that means that a lot more foreign investors are going to be taxed, and they're going to be taxed at a higher rate. So that's very interesting. We've also got first home buyers, and there's assistance for first home buyers, the stimulation there, hopefully. And then you've got property developers, and they have restricted the amount of foreign buyers, which really directly affects property developers as one of their like big markets. So yeah, so there's that impact as well. Foreign investment, now they're really limiting it. So all proposed foreign investments subject to Foreign Acquisitions and Takeovers Act. I'm not sure what that includes, but if you look down a bit further, so it needs to go through approval, FIRB approval, regardless of the value of the investment or the nature of the foreign investor. So, and it says down here, residential land proposals, vacant commercial land and proposals. Okay. What should foreign investors do? So it's really, you've got to be aware of these laws. Like it's all changing almost every day, it feels. So common transactions which may now require approval include acquisitions of interest in Australian real estate, regardless of value or type, including investments in funds or entities which directly or indirectly hold Australian real estate. Entry into property leases with a term which is reasonably expected to exceed 5 years, so more than a 5-year lease. Acquisitions of interest of 20% or more in Australian entities. So if they buy a part of a company, yeah, so just so much, right? There's so much restriction now placed on foreign investment. But there's also talk about it being a good time to invest as well, you know, and it's kind of one of those things. You've got, it's really affordable to borrow at the moment, assuming you can. And assuming you can find a property that you want, then it's potentially a good time. But, you know, it's very hard to say. There's just a lot of people talking about it. This one article had some good advice. Look for historically strong markets. So, you know, something that's maybe going to hold its value a bit better. Avoid areas that have dipped really hard. And go where the jobs were and will likely return to. So that's really interesting, but all sorts of advice out there. It's very hard. I mean, just like the property valuer, it's very hard to say with any kind of certainty what you should do. You've got tenants, poor old tenants. They won't get kicked out yet, but they may get kicked out at some point. So there's been a moratorium on termination of leases for 6 months. So, but it doesn't mean, and this is the key point, it doesn't mean that you don't have to pay the rent. So I mean, if you kind of think through it, like what does that mean? It means that if I haven't got a job for 6 months and then maybe I get a job back or hopefully find another income source, I have to then pay back the debt that I earned during that time to my landlord. You know, that's very hard. That's going to create a lot of debt for these people that weren't really planning to have debt. It'll really cripple them, you know. So, and it's there's also eligibility criteria for claiming that. To being eligible for this moratorium is that someone must have loss of employment, or someone must have got sick or had to look after a sick member. And it has to be 25% reduced. So there's a few conditions. So it doesn't really maybe necessarily apply to everyone as well. Landlords are also in the firing line. So, and these guys are really the victims of this whole thing as landlords and tenants. You've got landlords that are saying, look, the government policy you're putting out is very heavily weighted towards the tenants, but it doesn't really offer me protection. So it's kind of saying to the tenants, you can do whatever you like. I mean, assuming they're eligible. For the landlords or the owners, they still have to pay the expenses. They don't have a moratorium on their outgoing expenses on the property. So that's really where the problem lies, is who's at the end. When someone stops paying the bills, who is the one impacted? And you've also got real estate agents here that they don't want rent-free periods because they don't get their commissions. So there's also another impact to that. Governments are providing some support to landlords. There's a rental grant available, like say this is Queensland, and it's state by state, a lot of these things. Queensland, there's a rental grant for tenants. They've also got kind of a surplus or a stimulus package for landlords and tenants. 400 million, and then a deferral on land tax, which you're expected to pass on to the tenant. So there's those kind of things that, I mean, every market, every country, every state will have its own approach to helping each type of person. So let's talk about commercial property. So if you think about commercial property, it's largely underutilized at the moment. You know, you've got all these offices that people aren't in, but the rent is being what has to be paid. You've also got all of these sub property industries like assisted living property for aged care. Like that's a property market in its own. It requires its own ecosystem. You know, there's all sorts of things that are now impacted. They may not need the properties in the same ways, you know. Um, Hospitality properties and short-term leases are also very affected. You've got all of these industries that are very affected. They can't use their properties anymore. WeWork, good old WeWork, they have stopped paying rent in some of their locations. You've got, and then Staples, Subway, Mattress Firm, they've stopped paying rent to strong arm building owners into rent reductions. So it's really, really hectic. And, you know, these guys are the ones saying we can't afford to pay the rent. What about the small guys as well? You know, yeah, like everyone's really struggling. This graph shows the breakdown, the impact by kind of category, as we said before. And I think across all industries, this is a common thread, is that within the industry of that we're talking about, there's sub industries and kind of focuses. Some of them do well and some of them do poorly in this crisis. You know, there's some winners and some losers depending on your category, like depending on the relevance, you know. So senior housing, you can see here, it's the biggest impact. Skilled nursing, lodging, gaming, student housing, malls, you know, we don't need these things right now. Manufactured homes, strip center, office. Yeah, it's really interesting. Uh, and the government has influence also over these commercial leases as well. Um, and this is the thing, is like, it says the parties will take into account the fact that the risk of default on commercial leases is ultimately and already borne by the landlord. So that's saying that if everything defaults, it's the landlord, not the tenant, that is ultimately bearing that financial risk, that bigger impact. So that really is kind of similar to the other situation of landlords being kind of unhappy. Are property developers going to be okay? You know, there's a lot of property developers out there, or maybe a few on this call. A lot of what I found on property development was that equity, they've recently used equity finance over bank borrowings. So this has been a recent trend, and I think there was a lot of lessons learned from the GFC. So apparently they're quite happy in this respect. Some developers have formed joint ventures with landowners and even financiers and other big brands. You know, there's some really creative things that property developers are doing out there. This article on the right talks about how off the plan market will be impacted. Funding rules, you know, talking about the funding rules, like the way you can get a mortgage, am I approved or not? Was my pre-approval before coronavirus, is that still valid? All of those things are going to muck up stuff, you know. So that needs to be very clear. Right now, it's a little bit gray. Settlement valuation processes need to be reimagined. And that's the thing, is it needs to go online where it was very paper-based before. Demand could be affected by border closures. So we're talking about foreign investment. Also students, you know, all of these people that come here from overseas every year, they need places to live. There's a lack of confidence. We have to start going virtual, and first home buyers could be the ones with the least kind of equity or the least ability to buy, you know, and they could be the most impacted. So yeah, so let's move to the ecosystem, and this is really this is showing everything on one page, right? So we've got the human in the middle, the normal human. I don't really know what to call her because she has a few different things that she does, but she's a typical human with a few different activities in her life. Okay, so let's just go around. So we start on the right with her job. So she goes to work every day. She gets paid by her employer. She goes to work in a commercial property building, and she pays, and the employer pays rent. So the rent is paid up to the investor who owns that commercial property building. So that's kind of the relationship there, is that the employer, if you look at them, they're paying out payroll and paying out rent and other stuff. And then they sit in the commercial property. So that's kind of how that works. Going around, we've now got this normal human. She goes to the bank and gets a mortgage. So, and that's kind of a normal way she can get that mortgage, and then she pays that mortgage off. So that's kind of her job. The government sits here on the side and manages the interest rates to make sure the government inflation is all under control. She pays tax to the government. She also got some first home buyer support as well, which is great. So there's a little bit of a benefit there. We're all hunky-dory. This is all green at the moment. So as she buys this house, she gets a loan from the bank. The bank technically owns the house, but that's just security. And then within that house, she puts a tenant, she rents it out, and she starts making rental income and pays off that mortgage. So that's kind of that relationship. You've got the tenant in the house, but the house is really owned by the bank. And as we go around, you've got the seller. So the seller that actually sold her the house, they worked with a real estate agent. So the real estate agent, when there was a settlement, the seller pays commission to the real estate agent. The buyer pays commission to the real estate agent in some cases. And so that's kind of that relationship, that purchase of that house that the bank now owns. Okay, so with this real estate agent is often part of a group as well. And I've kind of grouped these guys together because they're often one lot. So this is really tied around the developer. So if you think about the developer's like the wholesaler of the property ecosystem. They're the ones that are like, yep, I'm going to make some new product. I'm going to create, they're creating. So they'll go and build some stuff. They will build listings. So basically they're building an inventory of listings. There's a property manager as well. So once they actually go live, they have to have another kind of organization to make sure they take care of the property, and they work very closely with real estate agents to sell those properties. So this human in the middle, she pays money to the developers when she buys a property from them. So she may have bought another house with another tenant, and the same way with a mortgage and a settlement and a commission through the developer. So the developer also is a seller. Yeah, so that's kind of it. And then I guess top right, just to complete it, we've also got the investor who also invests with property developers. So they are also like, yep, give me your best, give me your best. And these guys are producing and they buy it off the plan and before it's actually built. So it's like an investment and it has a return after a few years. So very, very interesting ecosystem. I think there's one person that I missed off, and it's the builder. So I'll add that to the next one. But you've also got the builder as well that sits behind the property developer. They also sit behind, they have a direct relationship with a human. And the builder at the moment is actually very busy and are considered an essential service as well. So that's quite interesting. The normal human's working at home. So she is she's thinking about what she can do to the property. All right, so let's talk about what's happening now in a COVID situation. All right, dum. So we see all this red on the screen now. And so what we're looking at is starting from the right, she can't work. So she isn't getting paid as much as she was. She's unhappy now. She's not a happy human. So we've got the employer. The employer is also struggling to pay his rent on their commercial property. The investor is very impacted. But the employer is getting some tax reforms. Maybe it will benefit them, hopefully. There's also business stimulus that's coming out to that employer as well. So there's kind of some benefits there. We've also got the government relationship, this unhappy human, she can't pay her tax. but she is getting some extra support from the government. She's getting income support, let's say. The government is also cutting interest rates to the bank. But regardless of that, this particular unhappy human, she can't pay her mortgage. So she's just bought a house off the seller. You know, she can't pay that mortgage. She's also got her tenant in the house, and the tenant can't pay her rent because she works in hospitality. So this is a major problem. She's not getting any money in from her work, from her tenant. She's got all of these bills coming out. She's got a tax bill. It's tax season coming up. She can't service her mortgage, and she's afraid that she's going to default. She can't kick her tenant out and go move in because they've lost their job. So she's really unhappy. Let's hypothetically say, throwing another situation in, that she hadn't yet settled with the seller. So now the seller can't actually close that transaction. They can't move on. What if they've already bought another property? What if they've got their investment already tied up? You know, what if it was already kind of set and now they can't do it anymore? This poor seller is like, well, should I force them to complete the transaction and sue them if they don't? Or should I take the hit, keep the house? I can't sell it for 6 more months. I'm over mortgaged. I can't pay my mortgage. Sellers also lost their jobs. So everyone is really in a bad position at the moment. This tenant, she can stay there, but she's racking up a big debt for living there, and she's not earning money at the moment. What's she going to do? Like owe this poor human money? So yeah, it's dramatic. You've got the real estate agent who's not getting commission, and there's just a lack of sellers. The sellers can't sell, won't sell. You've got the developers as well, and maybe she was looking to buy an apartment. She was looking for a second apartment this year. She's cautious. She's like, nah, I'm not getting any money. I'm not going to think about that. And also, I can't really afford my fees either. Like if there's any costs involved with this property ongoing, I need to cut those out. So it's really, really bad situation. And of course, the investor in the top right is cautious to invest. So it's tough. There's not a lot of green on the slide, and there's too many things happening in the ecosystem that will really ruin it. Okay, so let's keep going. Okay, so I'm going to jump across into a social scan. So let's just change the screen. Okay, great. So I'm showing Social Studio. Social Studio is an all-you-can-eat social media management tool. And we've got a COVID-19 workspace set up. So let's just go in. This is a live demo, ladies and gentlemen. We are going to show live data. Great, so this is showing publish, engage, analyze. Those are the 3 kind of pillars of social media management within Social Studio. It's a very easy to use tool, but it has enterprise power. So it's really built for multiple brands, multiple businesses to all use it together. But even small businesses can use it very easily, like without needing overhead. Great, okay, so what we've got here are a bunch of dashboards. And I've got one set up specifically for the property industry. So we're gonna listen in live on social media for the last 90 days to find out what was said on social media about property and COVID-19. So this is what I'm really interested in, is to find the mentions that share both of those keywords. And then I want to group them by different subtopic. So I'm going to show you how I actually set up the listing in the back end, so you get a feel for how the keywords work. But it's very interesting that we can do this analysis. And this is history, right? This is locked in history. This is not going to change. Like you can't go back and add more tweets on a certain day. You know, so it's really quite dramatic. So we can see here we've got 1.4 million posts on the property topic over the last 90 days. That's a huge amount. We've got 1 million of those happened on Twitter. YouTube, 119,000. So you can see here really the dominant channel is Twitter. Yeah, really interesting. News, blogs, forums. If we look at the sentiment, it's negative 42%, positive 37%. It's actually very positive. You know, there's a lot of good and bad conversation happening around this whole crisis. And then if we look here, here are the top 50 keywords that have been said that relate to the property industry over the last 90 days. So you've got words like housing, cards, Nashville. Wonder what's happening in Nashville. Payments, mortgage, government, rental, time, such an important word right now. Market, federal, business. Yeah, so very interesting keywords. Let's just have a look into some of these topics. So before I jump into the keyword groups, let me show you how I've set it up. So this is the topic profiles. One topic profile is a major topic. So I've got a topic for property. So within my topic for property, I then have subtopics. And you would have seen these from, when I introduced this meeting, we had all of the different topics, like what is property? First home, buyers, commercial, developers, foreign investors, inspection, interest rates, investors, landlords, mortgage, preppers. I also want to listen in for end of the world preppers. Is that market picking up? Property, property value, real estate agents, rental, sellers, tenants. So you can see here, these are all of the keywords. And then I'll go to a different one, developers. So when I'm listening for developers, I'm listening for apartment developer, home development, house developer, land developer. So I'm listening for these words, and I'm also listening in within 5 keywords of each other. So it kind of allows for those words to be used in various ways. I'm also saying and corona or and COVID-19, and I'm excluding words like bear, so I don't get corona bear, because I'm just not interested. Great, so that's how we set up the topic profile. So again, it's one major topic, which is property, and then lots of subtopics. These are the keyword groups. So if I go back now, you can see here are the keyword groups. So this is property, landlords, mortgages, tenants. So those are our top topics that are being talked about. Property is just a generic topic, so I'm going to take that out. So this is really the big one is landlords. That's the top conversation online over the last 90 days. Then we've got mortgages. So it's really landlords and mortgages are the top conversations. That's the most talked about 2 things, and they kind of are related, right? It's kind of the landlords paying the mortgages. And then the tenants is the 3rd biggest. It's amazing. Interest rates. So that really relates to mortgages. Rental as well. So rental really relates to tenants. Real estate agents are next, buyers, and then property value. And then I've got more. So if we add more topics, we've got developers. What is that? Commercial property, inspections, investors, sellers, first home buyers, preppers. Okay, can I see preppers? Maybe too small. Too small. Okay, well, let's jump out of here. But you get a view of the volume and where these conversations are. And you've got, I mean, if you look at landlords and mortgages together, that's almost half of the conversations on social media. So that's it's a pretty big one. So let's jump out of here. All right, so we can also visualize those same keyword groups across a trend line, and I might just zoom in. Okay, great. So I'm just gonna sort this by influencer score, but you can see here, I'm gonna take out property. Okay, take out property. And, oh, sorry, it's crunching a huge volume of data at the moment, ladies and gentlemen, please bear with me. Okay, cool. And so we've got these little spikes and we can drill in. Here's one from April 29th. So maybe let's have a quick look and see what this one is. Tenants. So you can see here that landlords and tenants, these 2 lines are often grouped together. Okay, COVID-19 has exacerbated the hardship in France's most deprived suburbs, where families stripped of income struggle to pay their rent. Also reminded landlords of the laws of the land. So yeah, it's a very conflicting problem, right? You've got victims on both sides. There's no true winner or loser. There's both victims. Everyone is a victim, and I think that's the hardest thing about this is there's just two victims, and you can see that often the same conversation. It's very interesting. Let's take out landlords and tenants. Um, okay, what's that one? Rental. Got a bit of a spike here. 80,000 mentions of rental on March 23rd. Yeah, so this is kind of for me, social media is a visualization of the reality of the world. There's a subset of people out here that do post what's going on social media. Okay, Home Premiere lets you rent brand new movies. Okay, not the one I was looking for. Told him he can stay in the property rent-free for 5 months. He's self-employed with 4 kids. Wow. Okay, that's great. Yeah, so I mean, it's a hard one for anyone with tenants. Anyone that is a tenant, it's a hard situation if you've been impacted. Let's take out the rental, see what we can see underneath that. So as you take out the big spikes, it really unearths what's underneath because you change the scale. So we've got here, this is interest rates, interest rates. So there would have been 2 big announcements on each of these days. And this is listening in for around the world as well. And we've got mortgages. So it's funny how there's a spike of mortgages right after interest rates. I wonder if that's correlated. And you do have these trends as well. There's a few big ones. Okay, that's taking a while to load. I might just move on and see what else there is outside of mortgages and interest rates. Okay, we've got buyers. Okay, there's just one spike. Property value, there's a spike here. And then real estate agents, they've had a few little spikes. So you can very quickly drill in to get an understanding of what's really happening for each of these groups. And this is what I've done to create this analysis. Those posts that we saw before were all surfaced through this analysis by looking into these spikes and seeing what's going on. Experts are predicting house price falls of 3% over the year. So what should buyers and sellers do for now? It's the big question, right? The $1 million question. Can I see preppers before we move on? I just want to see preppers, and let's see developers. Developers in the brown, April 13th. We've got a few property developers on the call. Property sellers, investors. Okay, so real estate developer. Okay, they died. Okay, some developer deaths. That's not good. Okay, sorry to hear that. Okay. All right, that's what happened on that day. Sorry, nothing more exciting for property developers. All right, sellers, we've got a few little spikes here. We've got property inspection spike here. So we can see what that is. So I need to wrap up this part of it, but it's very interesting. You can see that there's a lot going on online about the property industry. We can see the overall curve here. If I look into the countries that talk most about it, US, UK, Canada, India, Australia. So forget unknown, 1, 2, 3, 4, 5. So Australia's number 5. Yeah, and then as we scroll down, there's a bit of talk all over the world about the property industry and the impact of Corona. if I look at the media type trend, it's really dominated by Twitter. But if we take Twitter out, this is the curve with YouTube aggregators. And there's a few others like blogs, forums, news sites. Then if we look at the overall, so if I look at the, this is the overall COVID-19 mentions. So this actually peaks at 30 million mentions. So if we line this up with the, like the impact to the property industry, what is our peak? It's March 23rd. It's 1 week after the peak of coronavirus. And as we go down to March 23rd, we've got a little peak here, which coincides with our peak. Obviously, it's a much smaller number. Property peak makes up a small subset of all of those conversations about all sorts of things like doctors and things like that. And what's interesting to see as well is that it's a very small spike and then a fairly limited and relatively flat curve, whereas this is a downward curving curve, if I can be mathematical about it. It's kind of linear, but then it's petering out a bit. Yeah, still not mathematical, but that's my best. That's 933 mentions, 33 million mentions over the last 90 days. So that's really what the property share of conversation is, 1.4 out of the 933 million. And it's a bit delayed in its spike. So that's very interesting. Great. Okay, so let's go back to the presentation, and we're at the tail end. So any questions that you guys have, please don't hesitate to ask them. All right. So you should be able to see my presentation. So now we're going to go through and talk through some of the key challenges that were highlighted. All right. So this is my top 5 of the key challenges faced by the property industry. So number 1 is there's a property supply shortage. So there's not many people listing at the moment. Number 2, cautious investors. Because of the cash situation in that ecosystem, no one is certain about what they want to do. Number 3, foreign investor limitations. I believe that the backbone of the property market in many countries is foreign investment, and which affects GDP and all sorts of other things, so that's really a big one, is how companies are going to, or how governments are going to restrict that to protect the locals and their property. So I think it's one of those situations where you're in a weak position and other people can take advantage, and the government are trying to limit that, but it's really also going to hurt our economy. Number 4, tenant and landlord cash. Both of these guys are in a tough position, both. There's no winner. The ultimate loser is the landlord, but everyone loses, but they lose a little bit more. Number 5, mortgage debt crisis. So I can't pay my mortgage and I'm accumulating debt. That's going to create some kind of debt bubble. I'm no economist, but I'm certain it's not a good thing to accumulate 6 months rent debt or a mortgage debt if you can't service your mortgage. Great. Okay, so let's talk about what could the tactical response be, and then also how can you thrive? So this is really what I want to focus in on is we've built a 3-prong approach to the COVID-19 response. So starting with respond first, then move to adapt, and then finally thrive. So respond is like, what should I do immediately? Adapt is, what should I do during the crisis? Thrive is, what should I do to get out of the crisis and be on the upper foot? That's the whole idea, is we want to get on the upper foot, but we need to survive first. So really the tactical approach is respond and adapt. That's our tactical strategy. And then we've got our strategic strategy of thriving, right? This is us really doubling down. So if we look at our response framework and then map our different issues, so we had property supply shortage, cautious investors, etc. Then we look across the different pillars and we say, what should we do in case of this? Like, what should we do to mitigate? This is very hard to provide specific advice because you may be a property developer, you may be a buyer, you may be a seller, you may work for a property developer. You know, like there's so many different people in this ecosystem. What I would suggest, so with property supply shortage, in response, you should communicate with sellers and understand their position. So those sellers are the ones listing. You just need to find out where they're at, but you need to do it quickly and at scale. Then adapting, I would get creative with listings, you know, work with what you've got, but it's going to force creativity. And I think it's going to stimulate how real estate agents really go to market. And then in terms of thriving, with the property supply shortage, I would really just do an e-commerce virtual seller experience, you know, so with what you've got, you're making it very easy to buy, you're making it virtual, you're making it fully informed, and I can do it from home without going and viewing it. So it's kind of just improving your sales game, really. Cautious investors. So in response, you would communicate with them and also know their position. You know, what are they impacted by? Are they investing or are they holding? In terms of adapting, I would provide them with real-time advice and expect long sales cycles or long investment cycles. So you don't want to expect anything too much, but you just want to be there for them and helping them with the advice that they need to make decisions. And then in terms of thriving, it would be around building that virtual buyer experience for an investor. So if I'm an investor, I'm probably not going to be going around to the properties myself, but I want to look at all sorts of things. How can I make that a virtual process where I can do it all online, maybe from China even? Speaking of, the next one is foreign investor limitations. So if we have this problem, how we respond is really legislation advice and expect a long-term sales cycle with a lot of barriers. But that legislation advice is to keep them informed. Domestic market focus may be the answer for the midterm, right? So for the next 6 months, it may be a good opportunity to stimulate that local strategy. And then, as we said before, it's really again about making that experience as simple as possible. And really the simplest form is e-commerce. And I don't want to be simple by suggesting e-commerce for everything, but it's more about if you think about the human that's really doing the buying, if you can give them the same experience they'd have when they're buying, I don't know, a set of golf clubs. That's what it should be like. You know, it shouldn't be so hard for them. Okay, so moving on, tenant and landlord cash. So real-time advice, empathy, and know their position as well. Empathy is really key here, I think, is just to understand that they are both in a bad position. In terms of adapting, government support, low interest loans, you know, do whatever you can. And then finally, to thrive, I think the answer here is there's this opportunity for tenants and landlords to work together now. Sometimes they're not going to work together well, sometimes they're going to build trust through this process. But either way, maybe this is going to set a new tone for the relationship between tenant and landlord that's maybe virtual and online as well. So what if that's the way you thrive out of all of this, is to provide a platform to make it easier? And then finally, mortgage debt crisis. So real-time advice, empathy again, because humans are impacted. How to adapt, new housing categories for displaced, maybe. I don't know. This is a really hard one. I don't have the answer to this one. But there's going to be a lot of people that lose their homes. So there's got to be a solution for those people. And then thrive, creative lending and refinancing solutions. So all of these people with the debt bubble, they're going to need help to get out of it. So that's really what I think the opportunity is around the mortgage debt crisis. Great, so it's a wake-up call. We need to ask ourselves, what is the new normal? And how do we need to change? It is a really massive opportunity if we grab it. But if we just sit there and bunker down and do nothing, we're not going to really gain out of it or take advantage of it. Bain and Company did a study on the 2008-2009 financial crisis and found companies were either winners or losers, and often it was about the amount of investment and change during the crisis. The winners gained a lot more during the crisis. They gained 17%, and then they continued to gain after, but at a slower rate. Whereas the losers, who are more likely to bunker down and not invest, not find new revenue streams, these guys plodded along, and then if they survived, they just survived. If you think about the way your technology is architected in your business, this is what many companies look like, where you've got a customer and you've got the stakeholders on the left, and disparate and siloed technology in the middle. You know, it's very hard to scale your business like this. Really, the future is building a single customer view where you have one record for a person, a customer, and then you can track all of your channels and experiences against that one customer record. This also allows you to build intuitive, personalized journeys, where you can do things like, if they haven't interacted recently, you can send them relevant offers to them, send them follow-up SMS, add them to advertising campaigns, or remove them and suppress them to save money. And this kind of approach really allows people to get what they need to convert at the right time that's relevant for them, but we're not doing batch and blast anymore. I guess as a strategy, and this is again Bain and Company, on the left axis, it's really the market share, market position. So if you're strong, market position, and on the horizontal axis, it's really your financial strength. So if you're strong market position but not strong in finance, then it's really about kind of focusing on your core, removing everything else, becoming lean. If you're strong financial position, low market position, it's really a good time to invest and to grow capability. And if you're both, it's a good time to play offense. If you're neither, go big or go home. Great. So that's really the talk for today. I hope there was some value and some insights that you got out of it. Please, if you've got any questions, feel free to ask now. We just have a couple of minutes left. Great. All right. Well, thank you very much, everyone. I really enjoyed the session. Again, it'll be recorded and shared on our YouTube. We'll make the slides available on our website as well. So yeah, if there's anything else you'd like to hear about, please ask me. We are going to run this webinar again, probably in a month or so, to see how it continues to unfold. So look out for that invite. Thank you very much.